Hello, I'm Peter Towers, Managing Director of ESS BIZTOOLS. Welcome to this members webinar where we're going to take you through how we think you should be assisting your clients to survive COVID-19. It's definitely been an interesting start to 2020, hasn't it? The $130 billion package is the JobKeeper package, which commenced from 30 March 2020 for eligible employees that your clients had as at 1st of March 2020. This legislation applies to full-time employees and part-time employees at 1 March, but it also applies to casual employees who have been engaged as casual workers with your clients over the previous 12 months at least, from the 1st of March. Many of you will have already undertaken reviews as to who is eligible amongst the eligible employees of your clients. But the eligibility can still be determined up to the 31st of May, but the employees had to be paid during the month of April if they are going to receive the $1,500 per fortnight package benefit for the month of April. Employee nomination is the next item that I'd like to mention. The employee nomination form has to be completed by the employer, your client, and sent to the employee to complete. The employee has to ensure that only one JobKeeper package nomination form is lodged by them, so they can only lodge it with one employer. And the form obviously needs to be completed and lodged. Now the form says has to be lodged by the end of April 2020. The tax commissioner has announced in the last 48 hours that that date has now been extended until 31 May. So that might help some of your clients. The employer eligibility has to be determined because this program requires the employer to register for it. They must have at least one eligible employee as at the 1st of March 2020, and they need to have suffered a 30% drop in income when comparing a period in 2019 with a period in 2020. According to the tax office documents, the fall in turnover will be determined based on the GST turnover for March 2020 compared with the GST turnover for the month of March 2019, or the projected GST turnover for April 2020 when compared to the GST turnover for April 2019, or the projected GST turnover for the quarter April, May, June 2020 as compared to the same months, April, May, June 2019. You can reassess eligibility once the end of April has concluded. So the client might not become eligible for the JobKeeper status until June. And if that proves to be correct, the payment for the JobKeeper payment would start from that date, but there would be no retrospective adjustment back to 1 March, because obviously in the period from 1 March to the end of May, in that example I just gave, the employer was not eligible for that status. The government has announced, or the Taxation Office has announced, the alternative tests, and there's only 7 of them. And the Tax Commissioner has said the Commissioner cannot determine an alternative decline in turnover test in all circumstances. The Commissioner goes on to say, it is only in those circumstances where there is an event or circumstance, be it internal or external to an entity, that is outside the usual business setting for entities of that class, which results in the relevant comparison period in 2019 not being appropriate for the purpose of an entity in the class of entities satisfying the decline in turnover test. So what the Commissioner is telling us fairly loud and clear is he's allowing 7 alternative tests. And if your client doesn't fit into one of those, there will be no other tests that are available. So they have to fit into those tests. So you need to have an awareness of them. The legislative instrument has been published by the Australian government, and it's referred to as the Coronavirus Economic Response Package, Payments and Benefits, Alternative Decline in Turnover Tests Rules 2020. A brief summary of the tests, the alternatives have been set, are as follows. Business commencement. This is where an entity commences business after the relevant comparison period in 2019. So there's obviously nothing in 2019 to compare to, and the Commissioner's outlined a basis of how he will exercise his discretion. And the second one there is the business did not exist in the relevant comparison period in 2019. The second alternative is the business acquisition or disposal that changed the entity's turnover. So the entity was obviously acquired or disposed as part of their business after the relevant comparison in 2019. An entity has restructured part or all of its business after the relevant comparison period in 2019. A business has substantial increase in turnover when compared back to 2019, and you can read that one at your leisure. Entities affected by drought or other natural disaster in the relevant comparison period in 2019. And what the Commissioner is suggesting is you go back to that same month, March or April, or the same 3-monthly period in 2018. And he will accept that as being a basis for the income in 2019. The next alternative relates to entities who have an irregular turnover that is not cyclical, such as what can occur in the building and construction industries. And number 7 is a sole trader or a small partnership where the sole trader or one of the partners did not work for all or part of the relevant comparison period because they were sick, injured, or on leave during the relevant comparison period. And those circumstances affect the turnover of the sole trader or partnership. So they're the 7 alternative tests that the Tax Department has advised. And you will need to become familiar with those for any of your clients that need your assistance. The Tax Office obviously expect a lot more people to register with them than what has done at present. Over 850,000 businesses applied to be registered for information. Apparently, only about 400,000 have registered at this stage. It's expected that some of those have not been able to continue to make the payments because they've run out of money and were unable to borrow from the banks or didn't go and talk to a bank. But the Commissioner obviously believes that there's still a substantial number of businesses that would like to register for various reasons, have not yet registered. And that's why he has extended the registration deadline date now to 31 May 2020. Sole traders and other entities can nominate one person to be the recipient of a JobKeeper payment. This was not given much publicity, I don't think, when it was released by the government, but it's there, and you will need to be familiar with that particular clause when you're talking to your clients. In each of these cases, though, the client has to have suffered the turnover loss, which for a small or medium-sized enterprise is 30%. For a large enterprise turnover over $1 billion per annum, the percentage decrease needs to be 50% or more. And for a charity or not-for-profit that is registered with the appropriate federal authority, the drop is 15%. A sole trader, it's fairly simple. He's a sole trader. So a sole trader is able to claim the $1,500 per fortnight subsidy through until the end of September. If the business income, the sole trader's income, has dropped by 30%. A partner in a partnership, irrespective of the number of partners in a partnership, only one can be the JobKeeper package recipient. The partnership needs to have the drop in turnover of 30%. And that lucky person can be the person who receives the JobKeeper payment. Beneficiaries of a trust, one beneficiary, an adult beneficiary, is able to participate the same way as a partner. And directors or shareholders in a company, the one director can participate in receiving the benefit. So you need to be aware of that and monitoring that for your clients. The commercial tenants waiver. Oh, I skipped over registration there. Registration's now been extended, as I've said a couple of times already in this commentary, has been extended to 31 May 2020. I now want to move on to commercial tenants waivers. This was announced a few weeks ago by the Prime Minister after a cabinet meeting held on the 7th of April. That's a national cabinet meeting. The tax department has since issued some notes to clarify the Prime Minister's announcement on the 7th of April 2020. To qualify for this, a business must have qualified for the JobKeeper payment. So the business has to have a turnover of less than $50 million and to have suffered a 30% drop in income in those months of February or April, or the 3-month period, April, May, June. So even though your client might not wish to register for the JobKeeper payment to receive the $1,500 per fortnight, there could be some very valid reasons why that business operator might be very interested in trying to get a rent waiver or a rent deferment on their commercial premises. But to achieve that, under the new agreement, they have to be eligible for the JobKeeper payment. And you can go through that and talk to your clients about that if they're appropriately qualified. The next item I want to refer to is the apprenticeship trainee benefit. The employer, first of all, must have 20 full-time employees. If the business has the up to 20 full-time employees, they can claim a subsidy for every apprentice and trainee that they have. The subsidy is paid for a 9-month period, 1 January 2020 to 30 September 2020. And is calculated at 50% of the apprentice or trainee's wages in that 9-month period, up to a maximum of $7,000 subsidy per quarter. Therefore, the maximum subsidy is $21,000 per annum. So don't forget it. If you've got clients who have got apprentices or trainees and they've got less than 20 full-time employees, it's worth looking at. You have to apply for a registration for that. The tax-free boost is an automatic entitlement, with the tax office determining the eligibility based on the business activity statements being lodged as at the end of March. The tax-free boost can vary from $20,000 to $100,000 in this period running through to 30 September 2020. As the business activity statements are being lodged with the taxation office is making a decision for employers who are eligible for the $20,000 amount. $10,000 has been applied as at the end of March, with a further $5,000 at the end of June and a further $5,000 at the end of September. For businesses that can qualify for up to $100,000 over the entire period, $50,000 is being allocated to be utilised by eligible businesses with PAYGT tax totaling $50,000 for that period, and $25,000 for the June period and $25,000 for the September period. The Coronavirus Guarantee SME scheme is being funded by the Reserve Bank and the Australian government. $105 billion has been made available to the banks at 0.25% interest, for the banks to then lend to businesses with turnovers under $50 million. and the basis of the loan is it's a maximum of $250,000 to be repaid over 3 years at a low interest rate with no security. The federal government is actually guaranteeing 50% of the borrowing to the banks and other financial organizations who are participating in this very special lending. The guidelines from the Reserve Bank say that the banks will utilize their normal lending criteria in assessing the loan application. I understand clients who are submitting documents that have been prepared by their accountants and include up-to-date financial accounts with appropriate notes, a business plan looking at the next 3 years, budgets and cash flow forecasts also looking at the next 3 years, because the bank needs to be satisfied that the business is going to have the ability to repay the loan. Those businesses have been, on the main, successful in raising these loans. So there's some work there potentially for accountants to undertake, making sure that the required documentation is put in place that your clients can use. The next one normally might not have had too much relevance to this whole program, but because of coronavirus, some lodgement dates have been changed, and for that reason, it's worth mentioning to you here so you are aware of it. The normal research and development application date or registration date with Oz Industry for the year ended 30th of June 2019 would have been 30 April 2020. But Oz Industry through the department have decided to extend that date until the 30th of September 2020. So you've got plenty of time to lodge details of your clients' research and development projects undertaken in 2018-19 to the taxation of Oz Industry for their evaluation and review, and for them to then submit their report to the taxation office so that your client can claim the tax rebate based on their turnover levels, which for most small businesses will be 43.5%. The research and development advance and overseas findings normally have to be applied for the year ending 30th of June 20 by the 30th of June 2020. The Department of Industry, Innovation and Science has indicated that as long as they've been supplied some basic information, the company contact details, the company name, and the descriptive title of what the research and development project's all about, they will allow the actual final application to be delayed until 30 September 2019. Sorry, 2020, 30th of September 2020. So hopefully that helps you with an update on the various initiatives going on in conjunction with COVID-19 coronavirus. If you've got any questions on any of the matters which we've discussed in this update today, please send me an email, peter@essbiztools.com.au. Thank you for your support of ESS BizTools and ESS BizGrants. If you have any suggestions on grants that should be included within our system that perhaps we haven't included, please send us an email, peter@essbiztools.com.au. Thank you for your support. Stay safe and have a great day. Thank you for being with us today. Goodbye.